Today I would like to analyze Airports of Thailand, one of the biggest airports operator in the world. We can see here the airports they operate. Suvarnabhumi Airport, Phuket International Airport, also the Chiang Mai International Airport and some more. And we can see the stock price decreased around 25% in the last days. So this is a significant drop. And we can also see the reason here. They had one of the duty-free shops operator delaying one of the payment. But the company is affirming the full bank guarantee, so this is looking good actually. So of course there are some concerns about this payment and about the future payments of this duty-free shops, so we have to consider this. But today we're going to take a look at the financials to find out if Airports of Thailand is a good opportunity to buy right now. The first one we can recognize is a market cap of 621 billion baht, which equals around 18.23 billion US dollar. This is the second biggest airport operator in the world. We can see it here. And I think they have a dividend around 1.83%. So this dividend is also growing, I would say. We had a decline around COVID, which is understandable. It doesn't make sense to pay a high dividend at this point, but now it's recovering again. So I believe in the future, this dividend will also grow. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. We can see here we had a 50% decline in 2020. The revenue was around 31 billion baht. Then again in 2021, we had a 77% decline and the revenue was around 7 billion baht. Then this was obviously related to COVID. So then in 2022, we had the recovery around 137% increase to 16 billion baht. Then in 2023, we had again the increase around 186% to 48 billion baht. And then in 2024, we had the 39% increase to 67 million baht. So this is a good revenue growth, I would say. We had the decline in COVID, but then we have the recovery again. So for me, it's a check here in the revenue growth. The next thing we're looking for is free cash flow growth in the last 5 years. It's a very important number because the free cash flow can be used to pay the dividend, to pay the stock buybacks, to invest in the business, or to pay back the debt. So we want to see that grow. We can see here 2020, the free cash flow was around minus 13 billion baht. So this is related to the COVID. Then in 2021, it was around minus 20 billion baht. Then in 2022, around minus 9 billion baht. And then finally in 2023, we had a positive free cash flow around 5 billion baht. And then in 2024, we have the very strong number around 28 billion baht in the positive. So that's looking good. We have the strong recovery and it's a check here for me. The next thing we're looking for is the free cash flow yield over 4%. So this is also tells us about the valuation of this company. If it's under 4%, it could mean the company is overvalued right now. So what we're going to do is we're going to take the 28 billion baht and then we're going to divide it with the market cap of 621. And then we're going to get the free cash flow yield for 2024. So the number we get is around 4.5%. So this is a strong number, it's over 4%. And if we expect that this company can grow the free cash flow in the next years, I think it's a very good number. So it's a check here and it can look undervalued right now. The next thing we're looking for is debt to free cash flow ratio under 5. This means the company can pay back the debt with a free cash flow in under 5 years. Also very important number, if a company has too much debt, it can risk to go bankrupt. And we don't want to see that. So what we're going to do is we're going to take the short-term debt around 10 billion baht. Then we're going to add the long-term debt around 51 billion baht. And then we're going to divide it with the free cash flow in 2024 around 28 billion baht. And then we're going to get the debt to free cash flow ratio. So the number we get is around 2.17. So a little bit over 2 years we take to pay back the debt with the free cash flow. So this is a good number, it's under 5. So it's a good number and it's a check here. We can see as well how much money this company has in the bank. So the money they have is around 6 billion. This is also a good number, I would say. We can pay some of the debt back or to invest in the business, in new airport facilities, etc. So it's a good number. I think they have a very good balance sheet. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. It can help the stock price to increase because there are less shares outstanding. So we like to see that, especially with things the company is undervalued. So what we can see here, repurchase of common and preferred stock. We can see here 2019 and until 2023, they did not buy back their own shares. So it's understandable, especially in the COVID time, where they had a negative free cash flow, that they do not buy back their own shares. But I think this company is not buying back their shares in general. So the most thing they do is probably increasing this dividend around 1.83%. They will probably increase this in the future and invest the free cash flow probably in new airport facilities and something like this. So it's not a check here. Actually, we would like to see them buy back their own shares, but I think this company will not do that in the future as well. I would like to give my conclusion about this company. So let's start with a positive. So they had the revenue recovery after COVID. They also have the free cash flow growth and the free cash flow yield around 4.5%, which I believe that they can grow the revenue and the free cash flow in the future as well. They have a good balance sheet with a low amount of debt and a good amount of cash on hand. They also in a growing business, in my opinion. And what I don't really like is they do not directly own the airports. So the thing is, they have a contract with the government owns the airports, and the company operates and manages and invests in the airport infrastructure. So they pay an annual fee around 5%, and I think the contract will be renewed in about 10 years, so the fee could increase. But what we also have to consider is that this company, Airports of Thailand, is 70% owned by the government, so probably they will not increase the fee very high. And still, even though this company doesn't own the airports, they have the rights and they have the long-term contract with the government to manage these airports. So I think still is a valuable company, but we have to consider that they not directly own the airports. I think it's a big topic that we need to consider as well. So if we take a look at the stock price, we can see we had a significant drop around 25% in the last month. But if we take a look at the 6-month chart, we can see we had some upside momentum. And also at the 1-year chart, we can see we had some strong decline around here, but then again, the strong recovery around 15%. So I believe this drop will have the recovery again. So maybe in the next 6 months, we will see the stock price around 60 baht again. And this would be probably around 30% upside. And I believe that's probably happening. And we can see here as well, in the long term, this company had some good returns as well. Around 2014 to 2019, we had around 280% increase. And if we take a look even way back to 2011, we can see we had a really strong performance around over 1,700%. So this company had some really good performance, and I believe this company will recover again, and the stock price will be at some point around 60 baht again. So it could be a good recovery play at the moment.